Hello everyone, K Kim here from the Traders Club, twotradersclub.com. Today is December 1st, Tuesday. It's around 3 o'clock here in the Twin Cities. Market has just closed about 10 minutes ago. Just got a great move today from the buyers. So we'll look through some of the minor term sentiment. I also want to look at some weekly chart, and I want to give you guys some perspective looking at the moving edge on the weekly chart on S&P 500. And if we got some time, we'll look at some of these individual equities here that I have listed there here. First of all, to note that S&P 500 actually, looking at Spider here, we actually, had a pretty strong close here today. You can see that we also got a pretty good buying volume as well. You can see that the volume has been kind of drying up. That was when we started kind of grinding in this vicinity here, right above that 10 EMA. And yesterday, it kind of looked like it was going to be failed breakout of that, potentially a bull pennant pattern. Actually, it looks more like it if you look at S&P 500 index. I did tweet it out in this daily chart that it looked, it looked like a textbook bull pennant pattern. And then, obviously this market is never going to make it too easy for anybody. So what happened was it looked like it was going to be a bull pennant pattern, and it still was. Even with the yesterday's move, yesterday's sell-off, it still had that pattern. It still was above 10 EMA. You can see, even though we came down, we were still above that 10 EMA. And yesterday we actually had a pretty high selling volume there, as you can see right there. So, this would kind of fake a lot of bears and a lot of short sellers that it's going to continue lower. However, we have to understand that when we're staying above that 10 EMA, do you see that? That's that blue moving average right here. That's a daily 10 EMA, right? Exponential moving average. So you can see that last time we acted support right here. Last time we hit that level, we gapped down, continued on. So then that's a strong pivot. What I mean by pivot is because it acted strong support here. That 10 EMA, that blue line right here, acted strong support here. And then it flipped, right? And then acted as resistance, and then a resistance, and then flipped again and it became support. That's what we call pivot, right? A pivot. It's a pivot level. It's a pivot moving average, right? So then once even though we had a pretty significance, looking at a minor term, okay, micro term, obviously looking at more longer term, that 1 day sell-off, it doesn't mean anything. But for those of you who want to look at things closely, that even yesterday's sell-off, it really, we really have to continue to give benefit of the doubt to the buyers for the fact that we stayed above 10 EMA. And if we lost that level today, if we continue lower, then obviously after there will be that 20 EMA is a level to watch. If we lose that level, then it would have been 50 EMA, which I talked about on my last commentary video. And so they once stayed above the 10 EMA, benefit of doubt, continue, went on to the buyers, and then today we gapped off. The futures are up a lot yesterday, and then obviously it was kind of a lot of up and down move throughout the day. Mostly we stayed with doji pretty much, and then like towards the end of the day, the buyers came in, charged this thing up, and then we can see that we were able to close above the previous resistance level. This is a bullish signal in the minor term. The next level of support, or the resistance, is about a 212 level. Also, we have kind of a resistance level coming down here. It's not as strong resistance, I want to add, for the fact that here, let me change the color. Let me make it orange because it's not as strong resistance. The reason is because the angle of this resistance, right? It's almost horizontal, right? So angles that goes down like this is a much stronger resistance than angles, the steeper the angle is, the stronger the resistance. Basically, not just because we draw a stupid line that it's going to respect that line, it becomes a resistance. What it's saying is the selling pressure we're seeing, right? Because we've been seeing some sellers in this vicinity, there might be some sellers coming back in this vicinity as well. But when the angle of this thing is this steep, there's a very heavy selling going on. That's kind of what he's saying. And then once we hit that, remember we talked about that 50 MA here, we hit that 50 and it came down pretty hard there. So this angle of this resistance, you can see that it's not that steep. The angle of that is, pretty mild there. So, I don't know how strong it's going to be, but regardless, we have about 212, 211 or so. I think we're probably going to hit that tomorrow. And please don't be so quick to say that that's going to be a double top, because double top is not going to be confirmed until we hit until we hit this neckline and get below this neckline. You know, what we could see is we could potentially maybe pull back. Let's say we get to 212. Let's say we pull back, and then we create another, you know, some sort of a higher low, and then continue on. So just there are people do this all the time. That once you get to a resistance level, that's going to be a double top. You know, you want to make sure that you confirm certain conclusion before you coming to a conclusion so hastily. You know what I'm saying? So that's why so many people do not understand how technical actually work. Anyway, so looking at the daily chart here, you know, benefit of the doubt goes to buyers in the minor term and intermediate term. And in primary term, I want to show you something on the weekly chart. And this is something that we talked about here at the club just recently. I actually did a members video and we just talked about it, and I just want to share with you guys also. And you know what I'm trying to ascertain in this weekly chart is this. You know, so what are the sentiment? What is its reactionary movement after a correctional move, right? You can see that recent correctional move right here. I mean, if you look at this, look at that, you can say that these are pretty similar moves, correct? Yes. So these are pretty similar. You know, you could say like 10% corrections. And then what we want to see, again, this is a weekly chart. So I threw in these moving averages. So what I want to study right now is how the market reacted after its correctional move, and when was that when the market reversed back up. What was a certain sentiment that we saw? What was a certain action we saw? Again, I want you to pay attention to these moving averages, okay? So obviously, you know, I'm really zooming in here because I want you to see these moving averages closely. Again, this was back in July 2010, okay? July 2010. So we had this correction. Again, this is a weekly chart, which means that each candle represents 1 week. So you can see that we came down, and then it looked like it was going to continue higher. But I want you to pay attention to the moving average. You see the 20 EMA. Again, EMA means exponential moving average. SMA means a simple moving average, okay? EMA, and then you got 20. This is 20, and this is 10, right? And we got 50, right? So the pink dotted is 50, that green is 20, and the blue is 10, right? Those are all EMAs, right? So you can see that they haven't really crossed back up. What they're doing is they are actually just moving sideways. What does that mean? When the moving average is moving sideways, it means that there's still some fear. It's still undecided. Are we going to continue lower, or are we going to continue higher? Right? Once we saw these moving average cross like this, you see that 10 and 20 EMA on this weekly chart, they cross. That's what we call death cross, right? Then you can see that, I mean, we already saw these kind of sell-off, but once they start seeing that death cross, there's a little bit more sell-off came afterwards. So it's very, very important when we're dealing with the correctional phase. After a correction, we gotta ascertain where the moving averages are. Again, we're looking at 2010, and I'm gonna go back to where we're at today, and I'm gonna give you some perspective of today, right? So you can see the market went up, right? And we even stayed above these moving averages, but we can't so quick to judge because these moving averages are still, still moving sideways. That's the thing, is that there's so many people is, they get so caught up on these little tiny details, like, oh, we're staying above moving average, it's going to continue higher. It's not the precise level where the moving average is important. What's important is the direction of moving average. You probably heard that a lot. So when the moving average is moving sideways like this, the market is still deciding, is it going to continue lower, is it going to continue higher? But I want you to watch this. Even though we gotten above the moving averages, we had a sell-off. That's what we call bearish engulfing pattern, and then we continue to see about 2 more weeks of sell-off, and we saw a what is that? Bullish hammer candle, right? We saw bullish hammer candle. That needs to be what? Confirmed. We did see a confirmation there, so that's a great looking bullish candle there. But I want you to pay attention to this moving average. Look at this moving average here. They have crossed to the upside. 50 MA has crossed to the upside here. And finally, 10 and 20 has crossed to the upside. And this was it right here. This was a level when market reversed. And we saw what? We saw about 6 to 9 months. This is probably, 9 months of a bullish run. after seeing these weekly moving averages cross. Let's ascertain, let's do a little bit more scrutinizing here, and let's look at 2011. Here's a September, right? 2011 September correction there. And let's look at this right here. Same scenario right there. We came down hard, right? And we threw that hammer candle. We gapped up. We saw the confirmation continued on. That's a great sign because we even crossed above this neckline here. The resistance almost became as a pivot. I mean, it looks great. However, these moving average hasn't crossed quite yet. They're starting to cross, but they haven't crossed yet. Do you see this moving average here, right there? They're about to, but they really haven't crossed. I mean, they crossed the downside. You see that? 50 and 20 crossed to the downside, 50 and 10 EMA crossed the downside, but they haven't yet crossed back up to the upside, right? And then what happened? We saw another bearish move for 2 weeks. I mean, this looked like a perfect bull pennant pattern that failed. So we actually came came down. But again, that was the tell. That moving averages, right? This was a tell. That moving average telling us that we haven't quite crossed up yet. All the buyers are not quite in it yet. They're not convinced that it hasn't completely reversed. So there's some fear came down, and then we saw the market coming down for 2 weeks and reverse back up. This is what we call one white soldier pattern. You can see that this is where we're closed. We gapped up above 50% of prior candle, and then we closed above prior candles open, meaning we have a one white soldier reversal candle. And this time, even though we stayed up, we're still seeing these moving averages, moving sideways, right? Moving sideways. And then, then we got another fear week came up. So then we got this right there. And then got another bullish day or week. And finally, do you see this? Finally, we got all the moving averages crossed to the upside. Do you see it right there? 10 EMA is finally at the top, 20 EMA is just below that, and 50 EMA. Okay, remember, 50 EMA was at the top, 20 EMA just below it, and then 10 EMA at the bottom, which means we're in a bearish slope. And then we start moving sideways. Even when we're moving sideways, 50 EMA is at the top, and 20 EMA is just in the middle, and then 10 EMA is at the bottom. And then here you can see 10 EMA at the top, we're flipped. 20 EMA in the middle, and 50 EMA in the bottom. What does that mean? We just crossed. We have moving average crossed. And look at what happened. Market bounced. We had about 2 months of run, 1 month of correction, 2 months of run. And I would really call that more of a pullbacks because it was getting ready for some massive primary term uptrend. That's what I'm talking about right here. A massive primary term uptrend. So I mean, I wouldn't call these really a correction. I would really call it a pullback within a primary term uptrend. And it's all started here. And if you study these pullbacks and study these moving averages, then you will know. Let's look at today. Okay, today. What happened? This is today. So what we have in today's move is that we have 10 and 50 crossed. I mean, 10 and 20 crossed way up there. And then 20 and 50 crossed. And then we start seeing the 50 EMA at the top, 20 EMA in the middle, and then 10 EMA in the bottom. What happened right about here? See, we saw this bearish candle because we haven't quite completely crossed yet. I mean, we did have a 10 and 50 cross, but that 20 still hasn't crossed to the upside. That 10 EMA, that blue line, hasn't quite crossed to the upside, right? So then we got the bearish candle, and then next week we got that bullish candle. Looks like a bullish tweezer bottom candle or continuation. We got the bearish candle, same size, bullish candle. They're both Mariposa candle, right? No, not much a wick there. Boom, boom. Looks like tweezer candle there. That's what we call it, tweezer bottom, or in this case, tweezer continuation of this bullish run. And guess what happened? We got that 10, 20, 50 MA crossed with that move. Now we have a 10 at the top, 20 in the middle, 50 at the bottom, right? Remember back here, 50 was at the top, 20 in the middle, 10 EMA in the bottom, right? And then it flipped. So let's just talk probabilities here. Looking at, just looking at the past historical chart patterns and sentiments, reactionary movements, we can say that we have a very, very high probability now that we have a weekly chart moving averages crossing back up that we're going to get into another primary term uptrend, right? That is what I'm proposing in this video. Hope you guys find it very educational, and hope that you guys will use that in your trading and be successful at it. So I guess I just spent 15 minutes teaching you guys how to do that on the S&P 500. So I'm not going to go with other indices here. They look just pretty much like what S&P 500 looks like. Nasdaq is obviously the strongest one out of all of this. Semiconductors will be very, very strong as well. But let me just go to Apple here real quick. I know a lot of you guys are just wondering what's going on with Apple. And I've been telling you guys in last market commentary, every time when the Apple deals with these kind of gap area, right, it just gets freaked out, and we expected this. I'll just give you a quick recap of what we talked about last time, right? So last time we had this gap down right here, right? And then we filled that gap, and then we stayed here for like, for three, four weeks here. You can see that before we actually went higher. But you just, once we filled that, we came down, got back up, moved sideways for a little bit, and finally were to get back up. But we held there for a little bit. And this was the last time back in January of 2014 with a huge earnings gap down. And then you filled that gap right away pretty much. We came down, got back up, and then what happened? We stayed here for another 3 months. But again, this was earnings gap. It was a much more impact it did to the traders and investors. So I mean, there's a lot of fear, just people are shocked or whatever, and then they just, they just hung around here for a while. And then finally the next earning result came up, things did, positive reaction, and it took off. So let's go back here today. All right, let's go back here today. Same thing. This is exactly what we talked about, is that we got this. This was an earnings gap though, but it's not as bigger scale like the earnings gap we just saw. But the first example we just saw is pretty more like this. I think we're probably gonna stay. We're probably gonna range bound to about 120 and 115. I'm guessing 115, 114. Probably gonna stay here for a little bit, and then I'm not sure when. I'm still bullish on Apple, intermediate and primary term. I am leaning towards bullish side. I am still long on Apple. And so I think we're probably going to stay here for a while until we see some catalyst move, some strong bullish candle with some strong volume or some kind of gap up move. And nevertheless, we really need to see this gap fill right here. This is a 120 level. We're staying above that level and get up above about 120.50, and we want to see something in this perspective. And I think Apple is gonna get back onto its uptrend here. We also have the 20 MA, our 200 SMA here, still moving sideways here. So obviously the price wants to get back up here, and so again, there's basically what this chart is telling us, that there are a lot of fear. Still, there are fear in the market in Apple, amongst Apple traders and investors, and there are not a whole lot of people are jumping in right now. There are a whole lot of people are watching a certain level though, because I think public participation level is going to be probably about above 125 or so. But we do have another gap here, so we'll probably get up to 130. Once you get up here, probably going to start to, really, again, Apple just don't like gaps, man. Apple just, they don't like gaps, so it's probably going to stay around for a little bit, sideways move, and then I think if you are patient enough though, I think that Apple can get to 150, even 160 there, possibly next year. Let's look at Amazon. This was I do want, obviously when you look at Amazon, this is just very, very bullish stock. But I do want to pay attention to and I want to look at monthly. Okay. Obviously, first of all, I mean, unless you want to swing trade this or you want to get into a very short-term trade, This is not the level I want to go long. I just want to make that clear. This is not the level I want to go long. Let me get rid of MACD and put in stochastic actually. Again, this is Amazon monthly chart, right? Let me just do this. This is not where I want to go long. This is not, you know what I mean? This is not where I want to go long on Amazon. And this is definitely not, again, we're talking more about, you know, longer term perspective. I mean, Amazon could continue to grind higher for weeks or even months, but for anything long term than that, this is not, definitely not a level that you want to go long on Amazon for anything longer than, you know, within a month or so, or a couple weeks trade there. So monthly oscillators definitely not favoring the buyers. If you're wanting to go long on Amazon, I would really consider pulling back down to either, you know, 100 SMA there or 50 MA. But looks like it's I mean, as of today, I'm not saying that it's bearish. I'm not saying that we're gonna pull back or nothing like that. What I'm saying is that it's extended doesn't mean it has to pull back. It doesn't mean that. It just means that I won't want to go long. Where 10 EMA continue to act as support. So looking at minor term analysis, we are still bullish. And the 10 EMA has been acting as strong support. It's a very, very strong support. Look at the 10 EMA, how well it has been acting as support. And when we lose that 10 EMA, then it's 20 EMA. You see that hammer candle right there? That 20 MA active support here, and then look at another hammer, that 20 MA. So if you're like, you know, swing trading this would have been like a perfect level to go long right above that 10 MA. Once we retested 20 MA and gone above it, and then we stayed above 10, that would have been the level you go long, and then you continue to follow 10 MA, and then you just continue to trade and use 10 MA as kind of your guide or in some kind of stop loss below the 10 MA there, right? So it looks bullish. But looking at a long-term perspective, this is not the level that I want to go long on Amazon. Facebook, let's see, Facebook is pretty extended as well. However, again, this is what I'm talking about. As you can see, we have kind of recent resistance here. We are now breaking above that resistance, and you know, just that volume starting to come in, because the volume is kind of drying up, and a lot of selling volume here. That purple volume is selling, and then the blue volume is actually buying there. And then you see that 20 MA, where, you know, 20 MA, that 20 MA is acting as support, right? 20 MA acting as support here, 20 MA acting as support there, and then 20 MA acting as support yesterday. And we have what we call, again, one white soldier bullish candle pattern, staying above this resistance there, and we have the volume coming up, and so it looks like next level of resistance will be about 108.69, and you can just do some of your Fibonacci analysis and things like that, and see you can get some targets to maybe 113 or so, and you can gauge that in that way as well. Boston Scientific, we've been writing Boston Scientific for some time here, and we continue to be long on this. You know, if you just look at more of a big picture in Boston Scientific, we have a very, very strong primary term and healthy higher lows and higher highs going on there. And read the recent pullback. With the recent pullback here, and this was an important level that we needed to hold, right? We thrust higher, we pull back, and that's what we held, right? And in that process, what we did was we cultivated yet another higher low, and then we're now staying above that 10 EMA. So then, you know, obviously, I wrote an article in Boston Scientific with our positions and stuff like that, and our target levels. So if you want to look at that, go on twotradersclub.com, look for my Boston Scientific article. I put in my next target area there. But again, this is kind of one of those level, the gap area. Again, you know, some of the gap area, when that gets filled, it becomes kind of an instant resistance. So that's kind of what we're seeing here. But the 10 EMA acting as support. So let's see if we can get above it. If we can get above probably 1907 next resistance, and then from then on, I think Boston Scientific can really fly to the upside there. Quickly, ACN, another one that we've been long since, you know, early 2015. We closed most of our positions up here. We started adding back up here. And you know, once we started gotten above this, we gapped up, and this is it again, looking at moving average. All these moving averages were just crossing back up here, and then we cleared the horizontal resistance with the gap up. That's a strong catalyst jump start there, and this is an important level we needed to hold right here, right? This was an old resistance level, and then we came back at the support there. We came down, got back up, very, very strong. You see that strong volume, right? And that just clearing the resistance, that volume is very, very important. And then we pull back a little bit, but it looked more like a bull pennant pattern, right? Above that 10 EMA, and today it looks like we potentially break out. That is a very good, that's a pretty fair, volume with the breakout. And so the next resistance probably about 109 or so, and then continue 112, 115 looks bullish there. Juniper Networks is another. Our positions, we went long here right about here after the earnings gap. In late April 2015, we came down. We added it more recently right about here, and looks like we came that down. But again, this is an important level we need to hold, right? This is an old resistance level that is acting as a new support, and not to mention that's the 50 EMA is a vicinity that's hanging out. This is again we're talking about tweezer bottom earlier. That's a textbook tweezer bottom, right? We got the bearish candle, bullish candle, exactly same size, exactly same activity that you can see. I mean, these candles are awesome because they are what, telling us a story right on the 50 EMA. And then these candles need to be confirmed by, seeing supporters coming in and supporting its cause. And we saw that, the supporters coming in. And once we got back above these moving averages, above 10, 20 MA, we pull back down, but we retested 20 MA, and we're getting back above the moving average. Next level resistance about 30.76, and if we can clear that, we can probably get to about 32.20 there. And ACN, I think 35.36 is also doable. eBay, we've also been low on eBay since since about 24.72 is right about here. Gain up, and it completely eradicated our gain. We held through, and knowing that we're still in a primary term uptrend, you can see that, and then continued on with a good earnings result, and then we added some more after the earnings there, and then now eBay's doing quite well, holding above 1020. And today, I mean, we got some of that's a bearish engulfing candle, a little bit of a declining volume there, so we'll see what happens. But really looking at a more of a bigger picture on eBay, what we have is that this is an important level we need to. This is a major level. This is a major pivot level. This is a must-hold level. If the eBay wants to thrive next year or two, and even in 2016, this is a must-hold level, because look at this. This is a strong resistance. We got up, came down, retested twice, and acted strong. So again, this is a weekly chart there, and that was important for eBay to do that, retest that level, make it more solid support. When you retest it like this and makes a new support, that bounce is much stronger now than when we just broke out, right? And so eBay has a very high potential of continuing on. I've been meaning to write an article on eBay, but I haven't had a chance to do that. But I probably do that sometime. Broadcom is another one that I read an article about. 3 stocks set to soar. This is important. Again, we're looking at a weekly chart here, guys, and this is a major pivot. And we retested it, and then we're bouncing from it, right? So it's very important when he starts to pull back, stop saying that this is a bull trap. Everybody wants to call that a trap. It's not a trap until this thing just fall over, right, back inside the resistance. A lot of times when it breaks out, what it wants to do is retest the recent resistance or prior resistance. So when we break out like this, it likes to pull back and retest these resistance, and then it get back up. That's what we call what? Higher lows and higher highs. And that's what we call what? This was a public accumulation phase. That's what we call accumulation phase, right? If you know the stage analysis, that's stage 1. This is beginning of a public participation, which is stage 2. Before we get into stage 3, which is a consolidation, and then distribution potentially, which is stage 3 and 4. But we're just very beginning of stage 2, or a public participation, before this thing really starts to get up there. Broadcom looks very bullish to me in the long term, and I really like this stock. I like it fundamentally. I like it technically as well. Looking at it more of a minor term sentiment or a daily chart, you can see that this was an important level. We've gotten above that level. Left shoulder, head, right shoulder, perfectly formed, symmetrical inverted head and shoulder continuation pattern. Again, because we have closed above it, I wouldn't be surprised if this can get up a little bit and then pull back to retest lid level and then going back up. But sometimes it doesn't pull back. That's the thing about the stock market, is that you can't guarantee anything. All we have is a probability. There's a good probability it might pull back, but it might just continue on. So that's something that you have to work with in your engaging in your positions, and what you want to do and things like that. So Broadcom looks very bullish to me. Looks like if you just give some time and give some leniency on your stop, I mean, probably 60 or 62, 63, I might even more. Looking at a longer term chart, looks like this is something that you can really ride for the next 2, 3, 4, 5 years. Looking at a weekly chart. But looking at a daily chart, I think even 60, 62 is doable. But again, I wouldn't be surprised to see this thing coming back and retest this prior resistance as new support in this some sort of fashion there before we get into the certain price target. Hopefully these videos will be helpful to you. I know today's video market commentary went a little bit longer than I expected, but I really want to show you the spider, the weekly chart and the weekly moving average, how to use it for your advantage, and how to gauge the market in that perspective. And you really, though, if you really want to understand how the market moves, do not focus on a daily chart or short-term minor-term movement. Focus on a big picture. Look at your monthly chart, look at your especially weekly chart. Look at your weekly chart and then figure out where the stock is going, where the market is going, and then zoom in to your daily chart and then see also what's happening in minor to intermediate term. That's how I would suggest to do your analysis. First, go with a bigger picture and then zoom in and then look at a smaller picture there. So if you have any questions, you can always use comment section to ask any questions. Have a great night. I'll talk to you guys next time.